Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the low time frame bearish scenario, where we are looking for a three-wave structure that is already finished in an expanding flat ABC, where the most common target area for C is between the two 1.618s. And you get this area, as I get many questions about it, by pulling a Fibonacci normal fib from the high of A to the low of B, and also a trend-based fib from the low to the high of A to the low of B. Toggle on the two 1.618s, and then you get this area over here. The invalidation for this area is if price would move towards the upside and hits this high once more, because after this expanding flat, you want to see impulsive structures and continuation to the downside for much lower levels. If we look at the bullish scenario, then the low over here is made of this whole corrective structure, and preferably in this scenario, you're going to see impulsive structures to the upside, where this is then a wave 1 instead of a wave C, working on wave 2 or potentially already ended for then continuation to the upside in a wave 3. If we are looking for a wave 3 to the upside, you really want to see volume kicking in and price moving more parabolic. So big candles as well as big volume increasing towards the upside. Most common targets for a wave 2 retracement are pulled from the low to the high of 1 and are between the 0.5 and the 786. And as you can see, price is hanging around the golden pocket over here as well as the 786. More locally, there were mainly like two areas of support for extra confluence as well. We had over here an order block, acted as support but broke down, went to the other order block to fill this gap that we had over here, moved up, moved down, bit of ranging as well in between the two order blocks. And additionally, we also had actually a daily naked point of control over here, but that one is already hit and broken, so I removed it from my chart. We also had a daily level over here, but also broken, so I removed it. It was here as support, back tested as resistance, moved down. We didn't yet touch the daily naked point of control though at 28,875. We do have two lows over here, so maybe a liquidity grab hitting the daily naked point of control can be interesting. However, taking this low over here can be quite dangerous for this bullish scenario, and I'll explain more in the micro scenario coming up. But first, I'd like to talk about something quite important regarding the medium time frame scenarios in confluence with what's happening locally on the low time frame and the micro. So over here, potentially, right, I saw this scenario as well, we could have a WXY, where we then have a wave W to the upside in a three-wave structure, followed by a wave X, and then eventually a wave Y to the downside. So if price would move impulsively to the upside in a wave C and then a 535, it can be a wave C instead of a wave 3. The problem I have with this, however, is the target area for a wave Y. So in a WXY, the most common target area for Y is taken from the low to the high of W to the low of wave X. And if I then toggle on all the target areas over here, the most common one is between the 1 and the 1.236, with the 1.618 being a rare one. Now, as you can clearly see, the 1.618 has been tested. So if price moves towards the upside impulsively, it goes above the rare target for a wave Y, lowering the probabilities that this is an ABC and increasing the probabilities this is a wave 1, 2, and we go up for higher prices in a wave 3. But if we then move up in an impulsive structure, that would kind of mean that on the medium time frame, the low might be in. So from the whole correction that we had, this is then the low. But as also explained in my previous video, shortly, counting this as the low of this corrective structure is actually quite difficult. It's quite easy to get the low over here of a corrective structure on the medium time frame, but having it over here is not that easy and also not really preferred. Like the probabilities aren't really on the side of this being the low. However, if price would break towards the upside, we do have to start thinking about this over here being the low. But of course, I'll update you whenever that happens, and we will assess what's happening at that moment in time, right? It's just something that I at least wanted to mention about this ABC scenario. If we then go to the micro scenario over here, then we go to the 15-minute, and the micro will decide what's happening eventually on the medium time frame. So we're looking for an impulsive structure to the upside with an extended wave 5, where you can count a nice 5-wave structure in this final leg to the upside, also having the most volume, which is what you expect in an extended 5th wave. To the downside, we are then counting an impulsive or at least 3-wave structure, but it's an impulse, a 3-wave impulsive structure. I actually went down to the 3 and 5 minute, and also John in the group helps with his counts to provide a bit more insight into the very low time frames, and you can indeed count this as a 3-wave ABC structure, where we're then looking for a 1, 2, 3, 4, and then eventually a wave 5 correction and another 5-wave down, where the most common target for wave C is between the 1 and the 1.236, taken from the high to the low of A to the high of B. And this is why it's so important, what I mentioned earlier in the video, that if this low gets taken, it lowers the probabilities for a bullish scenario, because this is a very nice ABC to the downside, meaning that if this is the low of a wave C hitting the most common target area, you now want to see impulsive structures towards the upside, and you don't like to see this low taken. If this low is taken, we might have to think about a 1, 2, 3, 4 and eventually a wave 5, which would be more bearish, because after a wave 5 you expect a bounce and then continuation to the downside. So that is why this level over here is so important for price at the moment. The invalidation of the bullish scenario therefore is actually now at 28.9k. And if we go to the more bearish scenario, then as mentioned, we are looking for a 5-wave structure to the downside, where this preferably is the high of wave 4, as the 0.5 is the maximum target of a wave 4, pulled from the high of 2 to the low of wave 3, and then a wave 1, 2, 3. Important to note at least is that wave 3 is longer than wave 1, which is at least a minimum rule. Then we have a wave 4, and then eventually looking for a wave 5, where the most common target area for 5 is between the 1.236 and the 1.618, pulled from the low to the high of wave 4. That means that you want to see an impulsive structure to the downside in wave 5. The problem here for this wave 5 is that this move over here retraced quite high already, and of course if this is the high of 4, you now want to see an impulse down. But an impulse down does not mean going all the way like back up and have overlap with all the waves to the downside. It could mean you still have the potential of a diagonal to the downside. That is still an option if you have so much overlap, but we definitely need more price action for that. Another option is that wave 4 is not yet in the bearish scenario, and we still have another high to go, but you don't want to see candles close above the 0.5. There's no problem wicking this high and then move to the downside, something like this, for then a 3-wave structure and down. However, we already hit the 0.5, so it's not really preferred, right? Taking this high gives more probabilities for at least continuation to the upside. Doesn't mean it is going to be immediately the more bullish scenario, but it does increase the probabilities of a more bullish scenario. Because if this is a 3-wave structure to the downside and we move towards the upside to take this high, the bearish scenario will change to a diagonal structure, or a WXY. So we then have a 3, we could have another 3, right, and then a 3-wave structure, and then continue down in 3, 3, and something like this. But that is something that's very hypothetical at the moment. We first have to break the range, either break this high or we have to break this low. And that is also why I like to have the folder keeping it simple. Keeping it simple means taking this low, the bearish scenario gets a higher probability. Taking this high, the more bullish scenarios get a higher probability. Not to forget, it's like taking this high is almost like neutral / bullish, because it depends on how we take the high. Impulsive, high volume, well, we can expect higher prices, but if that's not the case, we can still expect something like this to happen. That depends on the reactions that we get. But taking this high would definitely, or this low over here, would not be bullish, and it's about taking this low before taking the high. So you want price to do this, then you could have a 5-wave structure over here potentially. After price is taking this high, then this low, this key level over here, will be removed as well, as we then get different scenarios. But in the end, this being the low for the bullish scenario is definitely preferred. After an ABC, you want to see continuation. So if this high is broken, preferably you don't see it go back down. If we then finally look at the CVD, we do have bullish CVD divergence over here, higher low in price, lower low CVD. We had it more locally, already played out, and also over here, higher low in price, lower low on the CVD, which you can see here, higher low in price, lower low on yellow as well as on blue. So a double bullish CVD there. Price did came down on very high volume, which always makes you think twice about bullish CVD divergences. So, you know, better be safe than sorry. But we do have bullish CVD divergences where the target is that important high over there. We also have news coming at 4 p.m. Central East European time. So make sure you trade safe around these hours as volatility might kick in. And then finally, the probabilities. Well, I like to keep it simple. On the medium time frame still, as it stands, the probabilities are still higher for another low to be made because it is so difficult to make this low the actual low of a bigger corrective structure. However, in the end, the micro decides what's happening on the low time frame and the medium time frame. So for me, the low time frame at the moment is neutral, and on the micro, I have that folder, keeping it simple. Take this low and the bearish scenarios become more probable. Take this high and being neutral / more bullish becomes more probable depending on the price action we get after taking this high. If it's something like this, well, you know, maybe the low is indeed in and we look for higher prices. But if price is grinding, not really like getting that impulsivity that you're looking for in a wave 3, then we are still looking for potentially a move to the downside. So we have to continue to observe and also keep an eye on the divergences, the CVD divergences, because what you definitely don't want is to see bearish CVD divergence. If a new high is forming, then have a lower high but a higher high on any of the two lines over here. We do also have, of course, the bigger bullish CVD divergence, and the first one that appears usually gets priority. So that is at least a positive for potentially more upside, but we have to be patient and see which of the two high, or at least which of the two sides is going to be broken first and the reaction that we get from it. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.